how big is the total addressable market for a high yield product that has a very low volatility? Ultimately, that question is like as old as time. Everyone's looking for high yield and low volatility. That is a Sharpe ratio. That is essentially the benchmark of performance for all funds, private equity, private credit, even traditional asset managers. Strategy is trying to attack that market with STRC and create what is essentially an unlimited demand on the underlying Bitcoin, because every dollar of STRC purchased is a dollar of Bitcoin purchased. I think they're doing an amazing job. And no, I don't think there really is a cap on that demand, so long as the STRC dividend remains as high as it is, and so long as other assets aren't outperforming it. And what we're seeing is that, with interest rates as high as they are, high yield bonds are performing on par with STRC. Some other forms of, foreign bonds are performing on par with STRC. But if interest rates decrease, the demand for STRC will only go up. And, I expect the interest rate environment to be that of falling interest rates over the next few years, just because of the fiscal dominance regime we're in. The U.S. needs to monetize their debt. They need to debase the currency to pay off interest and entitlement spending. So I think STRC is perfectly positioned to provide a high yield, low volatility product in an environment where high yield is going to become more and more scarce.
Now let's get into STRC because I think this is the thing that I saw as a game changer for MSTR, and people are calling it the iPhone moment. I don't know who was it first to call it that, but I see that term out a lot on Twitter and otherwhere. Why do you think people call it the iPhone moment of strategy?
Yeah, I've been thinking about this a lot. And there's three parts, right? So obviously the strategy spent 7 months issuing preferred equities before they stumbled upon Stretch in July of 25. Okay, why were the other preferred equity, why didn't they have as much demand? Why weren't they able to issue as many? I think it's a function of the volatility. It's difficult to price Bitcoin risk for a traditional asset manager. It's Bitcoin risk plus corporate risk strategy, right? Whenever you buy a fixed income instrument issued by a corporation, you take on the risk of the underlying business, the risk of the assets in the balance sheet, the risk of the issuing corporation, et cetera, et cetera. And these preferred equities were just too volatile for people to really pile into, right? Something like STRF, which is the senior preferred equity instrument. It has a longer duration and you're exposed to interest rates. When they stumble upon STRC, it's the first preferred equity with a shelf ATM registration on it, meaning they can issue more shares in real time. You may think, okay, dilution, like whatever. No, that's a really, really big financial innovation. And that's because never before, other than short duration treasury bonds, is there a yielding product that has stable principal, right? The only way you can really get a yielding product with stable principal in the modern market is through a treasury bill ETF or a money market fund, generally, right? Those have stable principal, but you get right now the 3.5 to 4% yield. So the only way to create that in the public markets is to have a fully liquid security with a variable rate monthly dividend payment. And that had never been created before. So this is really the first product brought to market where you have high yield plus transparent collateral via Bitcoin plus principal protection or principal stability. And I think ultimately that's, we've seen has massive product market fit. And it was something that never had been created before. This just had not been created before. So there was clearly an unlock when they put a shelf registration on preferred equity.
Yeah, otherwise preferred equities are a lot smaller and not as famous. I mean, I've never heard preferred equity before Stretch told me about it. Like I've never heard that. And I'm investing in the stock market since, I don't know, soon 10 years. And I've never heard that anywhere in any kind of paper. And maybe just for the viewers to know, like there is Strike, Strive, Stride, and Stretch now. How much bigger of a deal from volume of accumulating Bitcoin of significance in general is Stretch compared to the other kind of equities, preferred equities?
Yeah, Stretch is doing pretty much 10 times the amount of daily trading volume than any of the other preferred equities, not all included, but any of the other preferred equities. And what that shows you is that there's market participation. And if there's market participation and demand, which we're seeing, with it being pegged at its $100 price, then they can issue more. And, as an issuer, strategy is limited by the demand, which is kind of reflected by the volume. And, we're seeing the market just pop up and be quite receptive to the product. And I don't think strategy necessarily knew Stretch right off the bat what had this massive product market fit. I think they may have thought it actually was going to be Strike. Strike is the convertible preferred equity. I actually think Strike is going to have massive product market fit as strategy's price rises over time. But, at this moment in kind of Bitcoin's history, in uncertainty across all global markets, I think Stretch is finding its product market fit. And the only way for us to gauge that is by demand and volume.
It's so fascinating because it's the youngest of all of those products. I mean, there's Stream. I think Stream is younger, but like of those four in the US, Strike, Stretch is the youngest one, and it has more than 10x of the volume. That's significant. Like that tells you a lot, because I think those products benefit a lot from being long in the market. Like a Stretch that is 5 months old is not as nice as a Stretch that is 2 years old and already proved 2 years that they can pay the dividends, that it's vetted by all the credit rating agencies and all of those things. Talk to me about the significance, like the increase of the traditional financial space looking at Stretch as an actual product, as an actual good thing, once it gets like 1 year, 2 years, 3 years running in the market, and not just like being a very new thing as it is right now in the rookie, if you want to call it like that.
Yeah, I think that's a really, really good point. I mean, most pension funds, endowments, institutional investors, credit investors, maybe you have a credit fund that invests in public credit and private credit, and or private credit, excuse me. They can't buy a security that hasn't been issued and liquid and trading for 3 years, right? So like, they're not going to buy Stretch potentially until it's been trading in the market for 3 years. And, what we're going to be seeing, I think, over the next 2 or 3 years, strategy is going to continue to pay the dividend. That will make it the perceived credit worthiness of Stretch even more strong. Plus, more and more funds will be able to even just take a look at it simply because of its time in the market. So I think the setup is pretty insane where we sit now, so long as this demand continues to build, which it obviously is.
What are the kind of big unlocks that you are looking forward for MSTR and STRC? One that comes to my mind is the S&P 500 inclusion that might come down the road. Is there like what are you kind of looking forward in terms of unlocks for strategy and Stretch?
Yeah, I mean, in the early days, I think me and my fellow MSTR followers, the guys on True North, we over-indexed a little bit into the catalysts or positive developments in the public. We're starting to realize now, or I'm starting to realize now, that lots of these equities, lots of these preferred equities, they're influenced mainly by large institutional players who trade them, who buy them, who speculate on them, but also big, players that come and adopt them. That money matters a lot more than any sort of like short-term pop. So I've always believed that Bitcoin's price is generally a function long-term of just time. Bitcoin gets adopted over time by people with an overlay of kind of the macro trends, the general risk-on, risk-off sentiment. I think MSTR's seasoning of their preferred equities will generally follow the same sort of trend. It's time-based. They're proving out their track record and their ability to issue credit on kind of a time-based system. So, if STRC continues to pay this dividend for the next 5 years, in 5 years, it'll look 10 times more creditworthy just because it's been successful and has been effective for a long period of time. So, time-based adoption is always kind of my mental model.
So kind of the Lindy effect, I think we are talking about in Bitcoin. If something has been around for 10 years, it's more likely to be around for another 10 years, and so on. I think it's called Lindy effect, if I'm not mistaken.
I think you're right. Yeah, no, and that really, especially for an asset that isn't based on cash flows, right? Like if you have a company and it's been around for 20 years, but the entire value of the company is based on not properties of the company, but actual income statement financials, then if the cash flow of the corporation, this is destroyed or the management team dies, and any sort of risk factor listed in a 10Q for or a 10K for a corporation manifests, then the company may not be around in 10 years. Famously, the half-life of an S&P 500 company is 10 years. So over a 10-year period of time, from today, 10 years from today, half of all S&P 500 companies will not be in the S&P 500 anymore. So for corporations, the longer they're around, they aren't necessarily more durable. But with assets, right, with things that are valuable because of their properties, not because of management, the longer they're around, the more likely they are to be around in 10 years. So you're totally right.
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relay to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks, or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relay, the app, on your phone, or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called micro-seed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With micro-seed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because microseed is not selling the washer. Microseed is selling the device that stamps the washer. You get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io.